Yo, what's going on, guys? Welcome back. Hold on, let me play some music. That's fine. Okay, so in this video, I'm going to explain today how I caught the literal bottom of this move. This was a wick on the 1 second. It was literally the bottom of this move here, and of course I got break even, but I'm just going to show you how I took the trade because I also caught the legit bottom of this move as well, but I'm only going to be explaining this one because it applies to every time you're trying to top and bottom tick. So let's get on to the charts. The first thing that you want to do is go into a higher time frame, 15 minute, 30 minute, 1 hour, something high time frame, and find liquidity. So we have, what is that, like this, like all these like liquidity ranges, and market open literally just dumped. Like we just dumped. This is on the 15-minute time frame. Market open was right here. So this candle and this one candle alone was basically 100 points. And then we continue to dump. So I wanted to find an entry which caught me this candle here. So the little bottom of it, that's crazy. What I did was after I found, we have all this liquidity, I want to find where price might reverse from. Now it could be inside of this, fair value gap here. We could have price go in and then go out of it, but I wanted to see price kind of go lower because we were selling off extremely hard. So I wasn't looking for anything this high. So went to the 1 hour and I just marked out this order block. And whenever you take high time frame PD arrays, try to not worry about the premium of the PD array. You want to focus more on the discount. So let's just drop down to the 5 minute. You have the premium of the PD array, which has, of course, you can take, sure, there's a fair value gap in here, whatever, blah, blah, blah. Not cool in my opinion. I don't care. I don't think you should ever care about premium parts of PD arrays. So let's just mark out the lower part, which is a discount. This is where you want to take most of your trades in the market. Same for, let's say you have a range going on, like, just say this is your range. You want to take, let's say price goes up and then comes down into like this gap or this gap. That is considered a good entry because you're under the 50% of the range. So that's exactly what I'm talking about. Let me get rid of this. Oh shoot. Holy, wrong button. Okay. So in the discount, which is this range now, you want to find a PD array. Like another one, like anything. It could be a fair value gap, it could be an order block, a breaker block, literally anything. So I found this 5 minute order block that was in the discount of the 1 hour order block, and I took the CE of it. Now you could also go down to like, let's say a lower time frame here, and then you have, I don't know what you have in here, it doesn't really matter. Yeah, it really doesn't matter. So after you take that, I never take entries on decimals like 50.5 or 50.75 or 50.25. I always do either 51 or 50. And in this case, since I'm trying to bottom tick, I'll go up 1. So I actually took my entry on 51 instead of 50.5 because I've had cases where I did not get filled. And let's say you're going for a top tick, it would be different. So instead of 50.5 and you're trying to top tick, I would just go down to 50 because you want to get filled on these entries. And we actually did not even tap 50.25. The low was 50.5, I believe it was. Where was it? Yeah, the low was 50.5. So I want to make sure you get filled. I always go up to the nearest whole number, depending on what the trade is. So that was my entry. Literally, if you go to the 1 second, that was, where was it? Oh, it was a lot back. It was, what happened there? It was this entry right here. Literally a wick. Like, you can't get better than that. So that was the entry there. And then whenever you take these certain entries, I try to go break even basically as soon as we take out an internal high, which would be this. Oops. It would be that high there. So as soon as we take out that high, I'd go break even. And then you can either TP this high or I mean, we never made it this high, but like this high, and then this high, and then this high. I'm not sure why price decided to just be bearish today. I mean, we were kind of reacting out of, was it a 4 hour? Well, oh, we inversed the 4 hour a while back. Okay, and then we rejected off this rejection block. This one. Oops. So, whatever. We were bearish. Okay, I guess. But yeah, that's basically the trade I took for the bottom tick right here. And of course I went break even. I kind of was going for a bigger move, so I did get break even on this trade. So, but you could have caught 141 points. And whenever I do take trades like this, I do 5-point stops max. This would be a 5-point stop. And then you would have taken it from over here. And then let's just say you targeted that. That alone is 16 RR. That is really good. Also, another way that you can take trades like this is, let's say you want to have a higher win rate with it and still get high RR. Let's say you have a level you're confident in it. Start trading the seconds time frame, because price will always, I mean, literally, like, let's see, let me use my foot real quick. Yeah, we came into, this is a discount again. Discount of the range. And what do you have in the discount of the range? Well, you have, oops, this gap. Price comes into that gap, take your entry. You could take it literally as we get a reaction out of it. So let's just say on the candle close, oops, here it closes, oops. Close there, and then same stop. Let's just do the 50, okay, well 15 points is kind of a lot, but getting a higher win rate, of course. Then targeting the same high for 66 points and 4.4 RR. That's still a great trade. Like, and you're not getting any drawdown basically. Yeah, like 4 points of drawdown. That's literally nothing. And actually it's less because you're taking it on seconds time frame. So you're getting the entry as soon as candle closes, which means you're only getting 2 points of drawdown. So I mean, this is easy stuff. Like, let's see, 15-second time frame. What do we have? We have fair value gap right there. Price taps in, shoots up. Let's see, 30 seconds. Oh shoot, I'm not gonna be able to find it. All right, there it is. 30-second. Yeah, we have a 30-second fair value gap as well. Right there. Price taps into it, goes up. So if you're confident in a level and you know entry triggers, whether it's, I mean, just seconds time frame, fair value gap, inverse fair value gap, sometimes we'll even come back to, this is on the 1 minute, but like we'll even come back to this order block, and sometimes we'll get a reaction out of it, but we were just bearish on the day, I guess, so that just did not play out. If you have any questions about this exactly, like model or anything, let me know. I can send screenshots of each step and like have photos and kind of explain it a little bit better in the Discord. Just let me know what you guys want, and I'll see you guys in the next video. Peace out.